I need to get those numbers up because I literally have access to almost $5 million fucking dollars.
You don't have a loan on the golf course at all, right?
No.
Right.
No. I took out seconds on well, technically, yeah.
Yeah.
I took out equity and rolled it into essentially a mortgage.
Yeah.
So I got $4 million out on the golf course, and then those 5 mortgages that I had at RBC, I took out equity out of those as well.
What was a lending institution looking for in order to set up financing?
Did we ever talk about this? About the golf course?
We have before, yeah. Yeah. We could talk about it again.
Yeah, that's fine. We can talk about it.
But at what point in time, I'm like fucking spitting into this thing.
Probably stinks like shit.
At what point in time would the bank look at the golf course as a business and give you a traditional mortgage on it and give you your money back essentially?
Oh, I can get a 50-50 for sure. LTV. The bank was going to give me 50-50.
But what about like 70 or 75?
Oh, it would have to cover the debt.
Right? Okay, so that's what they were looking for essentially.
For sure. That's why we're running winter golf, getting the simulators, right? That's also why we're running meal prep out of the golf course because I need to get those numbers up because I literally have access to almost $5 million fucking dollars.
But that's the benefit too of the simulators being financed is that in terms of working capital, it like greatly increases that.
Yeah.
Rather than having to like upfront the cash and just buy it outright.
100%. Yeah. So I'm financing them at it's going to cost me about around $4,000 a month.
Oh, and we'll make fucking 40 grand a month, like easily.
Well, you better be fucking right, boy. Okay. But so the golf, when I was buying the golf course, we can talk about this and we'll cut it.
Yeah.
So
how you bought the golf course? Yeah.
So the way that I bought the golf course and the way that the financing ended up going down on the golf course was purchase price was called at I think 5.6.
Yeah.
I got $4 million from 2 of my industrial properties. So the property that we're in now, I got $2 million from. Then I got another property that we run Canadian protein out of that I pulled another $2 million out of, and there was way more equity to do that.
I'd imagine.
Yeah, but they just didn't want to give me more because the banks when you pull out equity, they want to know where it's going.
Yeah.
Because I want to be comfortable with it. They're very skittish. Banks don't want to lend to golf courses, so especially because the financials of the golf course were really fucked up.
And they were horrible.
Yeah, we'll get into that in a little bit. But so I had $4 million to play with there, and then I mortgaged. I remortgaged essentially. 5 properties. The 5 properties I just renewed at RBC CIBC now, and I ended up pulling out about $750,000. So it gave me about 700 or 475.
Are these some of your senior townhomes? Those ones?
Yeah. So it gave me $4.75 million bucks, and then I ended up putting down $850,000 of my own money on the golf course, and that was it.
Yeah.
So that's what ended up. That's how we.
Which is kind of wild, like just the fact that you bought the golf course cash, technically.
Yeah.
Right.
Pretty much. Yeah. It is cash. Like at the end of the day, it's my fucking money. It's my equity. So
exactly.
technically, it's cash. But that's why we're working so diligently with bringing in the simulators, bringing in meal prep because I have almost $5 million of cash sitting there that I can potentially pull out. At the very least, I feel like when it comes time for renewal, with the numbers that we're doing now, it probably would justify pulling out a couple $1 million.
Yeah.
And getting some of that equity out so that now we have a couple more $1 million to play with doing whatever we want to do.
Yeah, fuck it. Even at let's call it a 70-30 split, like LTV, with $4 million, you can start going after like a fucking $15 million property.
Yeah, right? Or like even, private loaning it or doing something if that's not available, right? Or we're not able to do something. So, so yes, some of the problems that I had with getting nobody wants to touch a golf course. Nobody wants to lend to a golf course.
Yeah.
They're a very seasonal business. That's kind of the issue as well. The financials of the golf course when we took it over were not doing well at all. How much was even the government subsidies? Because we took over the golf course in the last 2 years of the golf course's performance was solely based off of COVID, a COVID environment, and it was only golf. There was no restaurant, there was no alcohol sales, there was nothing. Well, there was actually, right? Beer cart kind of stuff.
Yeah, beer cart.
Pro shop type stuff, but no like restaurant, no full force, golf course or hospitality style of
income.
Yeah, income. So, what was some of the numbers that you remember? Like a lot of the biggest problems was with those financials with a lot of government subsidies.
Yeah, essentially what they were looking at was they were claiming a certain income or ROI based on their income being at a certain level, but that of a percentage of that income, 30% of it was coming from government subsidies.
Yeah.
So like that's not a reliable source of income moving forward, right? And now, okay, you could argue that would be replaced by restaurant income, but we had no idea what the restaurant income would have been like if we were outside of COVID.
They couldn't.
And
even...
we were looking at historical financials. It was like we weren't able to deduct that information either because those financials were blended with another business.
Yeah,
that you didn't take over,
which may or may not have been strategically, purposely presented that way.
Yeah.
Something else that we ended up coming out was during those government subsidies, the previous owner was inflating them significantly.
Yeah, in terms of the payable wages.
Yeah, the wages from employees so that they could get higher incentives from the government during COVID. So they were really kind of like they were fucking with the books from that aspect. So there was a lot of like weird things going on, but the banks really did not like that. Was it 30% of the income? 30% of the income was government subsidies. They did not like that whatsoever.
Yeah, but like COVID subsidies, like not COVID even just subsidies. Like general golf course subsidies or whatever. Like it's COVID related subsidies.
Yeah, COVID relief essentially.
Yeah.
So they didn't like that. I did get quotes for like 50% LTV, but only like over 10 years. I had one guy quote me.
Like 10-year AM?
Yeah, 10-year AM. One guy quoted me like 15-year AM, which is fucking crazy.
Yeah.
So RBC, because I have a really good banking experience with them or a relationship with them, they ended up telling me like, listen, like a traditional mortgage is not going to, number one, get done in time because this was kind of like a shotgun deal. And then number two, you're not going to get the AM that you want. So this is the only way to really do it. So that's why come time to remortgage, I'm hoping that I can still get an extended amortization as well because if
like
I can't,
30 years,
if I can't, it doesn't make any sense for me to even drop out of the current situation that I have even right now.
Yeah.
Because I'm not doing a 10-year AM. That's fucking crazy.
No, the business won't cash flow.
Exactly. So it'll be really interesting to see what comes out of this at that point in time. But yeah, as of right now, it's a little bit of an odd kind of even nerve-wracking situation where...
So this is in the spring?
It's in the spring. It's going to be in around March. End of March, I believe. We took over end of March. So, we're supposed to see like a couple more. So I've actually been talking with the bank trying to figure out like what my options are right now to get something potentially locked in even now for maybe like another year or two just to see, because like if the business does really well and we start pumping the numbers out, then I could always take a second mortgage on it, get some of my money back.
Yeah.
So there's options for what we can do, but I'm really starting to have those conversations with the bank now to kind of get ahead of like another 2 or 3, who knows what, however many rate increases happen. So